What if the biggest stock gains of the next 2 years are already hiding in plain sight? Not in the next startup, not in some secret penny stock, but in companies quietly shaping the future while everyone's watching something else. Let's uncover 6 of them. And by the end, you might realize the best opportunities aren't the loudest ones. You know what separates consistent investors from the ones who burn out? It's not luck. It's patience. Real wealth doesn't come from guessing right one time. It comes from sticking with the companies that keep innovating no matter what the headlines say. And right now, tech and data are at the center of nearly everything. Whether it's AI, finance, defense, or energy, it all runs on technology. So let's talk about 6 stocks that will still matter well into 2026 and beyond. Let's start with Meta, a company that's gone from being just Facebook to one of the most powerful AI and data businesses on the planet. Between Facebook, Instagram, and WhatsApp, Meta reaches nearly half of humanity. That's not just a user base, that's global infrastructure. And now they're building AI models like Llama to personalize ads, optimize engagement, and make every scroll more profitable. People mock the metaverse, but it forced Meta to build an insane amount of AI computing power that's now paying off in real time. With strong cash flow and user growth back on track, Meta's quietly turning into one of the most efficient AI monetization machines in the world. Next, Robinhood, ticker symbol HOOD, has gone through one of the market's biggest transformations. The meme-era image is, well, long gone. Today, Robinhood is turning into a full financial platform. We're talking retirement accounts, crypto, credit cards, and even AI-driven investing tools. Their global expansion, after acquiring Bitstamp, gave them access to more than 30 new international markets. Then there's Palantir, ticker PLTR. It's one of those companies that honestly most people recognize by name but don't fully understand. Palantir doesn't build flashy apps, it builds infrastructure. Their software runs defense systems, government logistics, and energy networks. And once a client integrates Palantir, it rarely leaves. Because the system becomes essential, that's a moat you just can't replicate. And get this, no debt problem. This isn't a meme stock anymore. It's the software backbone of modern decision-making. Now let's talk about NVIDIA. Ticker NVDA, the engine of the entire AI economy. Every major AI platform, from OpenAI to Tesla's autonomous systems, depends on NVIDIA's chips. But here's what makes them truly powerful. They don't just sell hardware, they own the software ecosystem too. Their CUDA platform is now the global standard for AI developers. For investors who want steady exposure without picking single winners, QQQM, the Invesco Nasdaq 100 ETF, is a smart move. It's basically a collection of the strongest non-financial companies in the world: Apple, Microsoft, Amazon, Nvidia, Meta, and Google, all in one ticker. It's cheaper to hold than the traditional QQQ and built for long-term compounding. If you want tech exposure without the drama, QQQM is the quiet workhorse that delivers. Then there's SCHG, the Schwab U.S. Large Cap Growth ETF, the calm, reliable foundation of a modern portfolio. It's loaded with the same world-class names, Apple, Microsoft, Amazon, but spreads across multiple sectors, not just tech. The cost is almost $0. And the exposure is massive. SCHG doesn't need to make headlines because it already owns the companies that do. Before we wrap up, let's give a quick nod to a few other names that deserve attention heading into 2026. AMD still challenging NVIDIA in the AI chip race. Apple integrating AI across its entire ecosystem. Microsoft, embedding artificial intelligence into every product from Office to Azure. Amazon, combining e-commerce dominance with cloud and robotics. Google, reinventing search and ads with AI-powered tools. And iBit, the iShares Bitcoin ETF, giving investors a simple, regulated path to crypto exposure without all the technical hassle. The biggest mistake most investors make? They think timing matters more than time, but markets reward patience, not perfection. If you stay focused on great businesses and give them enough time, the results take care of themselves. If you enjoyed this breakdown, make sure to subscribe to MoneyQuest Broker. We cover ETFs, dividend strategies, and the companies shaping the next wave of investing. It really helps the channel grow and keeps videos like this coming every week. And of course, this video is for educational purposes only. It's not financial advice. Always do your own research or talk to a licensed advisor before making any investment decisions. Because building wealth isn't about chasing what's hot, it's about owning what lasts.